If you haven't been living under a rock, or even if you are, you must have had a first-hand experience or been told about the financial crisis of 2008, which became the founding stone of the huge crypto uptake as we know it today. In the events following the financial crisis of 2008 through 2009, in August of 2008, someone published the very first paper for the development of Bitcoin on a blockchain platform using the pseudonym Satoshi Nakamoto. To date, no one knows who they are, if they accomplished this alone or had a team, or where they came from. All we can say is that they might have been someone who got pissed off for losing their job in the financial crisis. And rather than just laying around and blaming the bogus monetary system, they decided to take matters in their own hands and develop a piece of technology that changed the world as we know it today. Still, these are all speculations, because we still don't know the real motive behind the development of Bitcoin, nor their identity until they reveal themselves. So, Satoshi, if you are out there and stumbled upon my video, just DM me and let me know who you are. I promise I won't tell a soul. If you aren't Satoshi, then stick around because today in this video, we will give you a quick recap of how crypto became an overnight sensation that took the financial world by storm, and whether this whole crypto thing is a huge bubble that will soon pop, or if it is here to stay for the long term. You won't want to miss it, as turning the cheek may result in hundreds of thousands or even millions of dollars in unrealized gains. So if you hate money, then click away, but if you don't, then stick around, as we will be giving you the juice on why right now is the best opportunity to learn and get involved in crypto. So just sit back and relax. It's going to be a very interesting history lesson. If you are new to this channel,
welcome to Crypto Asset News,
where we simplify the most complex crypto concepts for everyday people like you and I, and also bridge the gap between the universe and the metaverse, so that when all your friends are balling out of control in both verses, you stay ready so you don't have to get ready. If you haven't already hit the subscribe button, please do, and comment below to let them know that you don't want to be left behind. Before we talk about how crypto came to be, we should first discuss why it became such a revolutionary thing. In traditional finance or centralized finance, you keep your money in banks as you trust that they will keep your money safe and will return it back to you on demand. Ultimately, it makes sense because who would want to run the risk of keeping all their money under their mattress or in a vault only for it to be stolen? Banks incentivize placing money with them as they give you an annual yield anywhere from 0.2 to 0.6%. Whenever you deposit money at the bank, transfer it to someone, or withdraw some money. As all these transactions are happening, there is a log that is constantly being maintained by the bank's database. Basically, it tracks all your transfers and withdrawals. These logs are then shared by other banks to maintain an overall centralized mechanism of the monetary system. What happened in the 2008 through 2009 financial crisis changed the outlook of these money-managing entities around the globe. The crisis really put a dent in the trust that people had for banks. After all, the major highlight of the crisis was that banks had lent out more money than they had available and were over-leveraged, as they saw an opportunity in the housing market that they could potentially profit off. And when these borrowers defaulted, the banks had no money left to pay back to their depositors. Pretty infuriating, right? Like, imagine you go to the bank in the morning and ask for your own money, but the person sitting across the counter says that they cannot let you take your own money out. At this point, I'd say even going full-on Karen would have been socially acceptable. Well, all these events led to the development of Bitcoin, the first decentralized cryptocurrency where you are in control of your money, which use blockchain instead of a traditional database, meaning you can take out as much of your money when you wanted it. Cryptocurrencies, rather than using the traditional database controlled by people or companies, use the blockchain, which consists of decentralized databases publicly present over the web. No single entity can control or alter the blockchain database, as each block is connected to several blocks, all keeping a check on data. Hence, no tempering or controlling of data occurs. Now, coming back to cryptocurrencies. For many people today, they see Bitcoin and other cryptocurrencies as just another way of making insane gains and putting all of your life savings in a meme coin, or the next coin that Elon Musk decides to tweet about. Even many investment experts, such as Peter Schiff, have labeled Bitcoin and other cryptocurrencies as a Ponzi scheme when comparing it to gold. However, it is argued that crypto wasn't exactly made to earn money from. Instead, it was a mechanism of overtaking the traditional monetary instruments that are controlled and managed by the financial entities. These entities hold the ultimate power when it comes to practicing complete control over the monetary world. However, when all these mechanisms failed, Bitcoin appeared as a herald of the revolution that had been overdue. Not only did Bitcoin offer a decentralized mechanism of payment transfer for the first time, but it was the first to introduce a peer-to-peer system of payment transfer. This essentially means you don't need a bank to store your money. All your money can stay in your digital wallet on your smartphone, and the transaction can take place with a tap on the screen, meaning you act as the bank and have full control over your finances. Same with whomever decides to participate on the blockchain. During the 2010 through 2014 period, Bitcoin trade began. Bitcoin started the trade at a price of only $0.0008. Now imagine getting in on that price. You probably would be watching this video from a 5-star resort somewhere in the Caribbean. I don't blame you if you are. You bet I'd be doing the same exact thing. This period and the years following showed that Bitcoin was there to stay in the market. The market did observe some fluctuations. However, the usual trend showed increasing prices. Bitcoin became an underground, irresistible reality to the world. With more and more cryptocurrencies entering the market, it became quite evident that nothing could stand against this new phenomenon. Now, you may expect the recap to end here, but the story is not quite over yet. 2014 onwards, negative news about Bitcoin and crypto in general took the hot seat in global news. Once again, the public had managed to attack this technological advance, mostly because of its foreign nature and weird words included with it, such as blockchain and decentralization. It was like speaking in a foreign language back then. People started to misuse its features for their own personal gain. This isn't unusual, considering that whenever humans are given something beneficial, we figure out a way to ruin it. Just looking at you, global warming. The biggest problem arose when Bitcoin became a common means of commerce in the black market, and more money-related scandals were reported than transactions occurred in Bitcoin. The primary cause of this was that purchases which used Bitcoin were for the sales of contraband like drugs, arms, and ammunition, which became harder to track. We recommend that you don't partake in these activities because the blockchain records all transactions, and even if they were through the black market and untraceable at the time, your internet activity is monitored. Don't blame me if you get caught accessing the black market. However, the major reason for all this bad publicity was propaganda coming from somewhere else. Yup, you guessed right. Giants at Wall Street didn't like it. They started plotting against Bitcoin as they always do when they see something that's probably going to put them out of business. With that being said, I know there was a fair share of problems with adopting Bitcoin as a formalized system, such as decentralization of currency posing several regulation issues. But the threat that Bitcoin posed on the status quo was the biggest point of contention. Today, cryptocurrency continues to sustain all the attacks and obstructions that are thrown its way. And although there are still millions of disbelievers, now there are thousands of currencies, with ranging prices from a few cents to Bitcoin trading at over $40,000. Although some may argue crypto is still in its infancy phase and we haven't seen much of what it has to offer yet, this is proof that crypto has the potential to become a disruptive force for the financial sector for decades or even centuries to come. Every few years, a technology appears that is revolutionary and is there to test the boundaries of traditional methods. Crypto and blockchain technology is that disruptive technology, just as the internet or Web 2.0 was that destructive technology, led by companies like Apple and Microsoft. In order for the world to keep evolving with newer and newer technologies to enhance our quality of life and convenience in which we interact in our day-to-day lives, the boundaries on what we know and believe to be an advancement need to be tested. You will commonly hear that the volatile nature of something like crypto is not sustainable. But the real potential of crypto lies in the technological development we will see in industries such as real estate, supply chain, entertainment, and commerce. The potential of crypto is immense. Let's wait and watch together to see what is to come of this major influence in all of our lives. Whether it will be something our grandchildren utilize casually, or whether it will just be another fly-by-day trend that never made it on a mass adoption level. I hope you enjoyed this video. If you did, please give it a like and drop a comment. Let us know if you think crypto is here to stay or if the bubble is soon to pop. If you enjoy learning about crypto and the opportunities in it for you, hit the subscribe button as we will be releasing videos like these regularly. So make sure you don't miss out. See you in the next one.